currently dropping about 20% in the past 5 days. They just announced some negative news that sort of scared people off because it could cause some dilution. They plan to offer a $750 million in convertible senior notes that will be due in 2029. This is the latest news in SoFi, and it has caused the stock to drop. Today we're going to look at some of the financials, and is it a good time to buy SoFi at this price? If we take a look at some of the insider trading that we have for SoFi, you could see that the CEO, CFO, they were all buying around the $6 ranges. So are you buying it at a good discount? Let's go on and get started. All right, so let's look at the micro, look at some quarterly data. This is going to be the latest December quarter that was just reported. So I'm pretty much just taking all of the latest data they just reported from the SoFi Q4 2023 earnings call transcript. So just a couple things we want to look at. There are some huge improvements on this data that is just reported. Latest revenue, $603 million. That is a 36% increase. And also, this is the first quarterly earnings per share that is positive. So as you can see, there are some improvements happening. Go ahead and just go to the cash flow from operations. When you take the latest quarter that they reported, negative $247 million in cash flows compared to negative 2,418. So 90% improvement year over year. Come down to net income. We'll take a look. This is the first quarter of positive net income. Now they are trying to aim for positive net income for the full year. This is showing they are on the right path. This is all to just give you a longer term perspective. From 2018, they have grown annual adjusted net revenue by more than 8 times, annual EBITDA by almost 3 times, members by more than 11 times. So as you can see, they've been growing a lot since 2018. In the fourth quarter, they added 585,000 new members alone. So anyways, they are getting slammed because they do intend to place a $750 million worth of convertible senior notes. So yeah, a little bit more dilution. If we take a look at the amount of shares and we compare it year over year, it does look like it has been increasing, which is normally a bad sign, but you got to remember this is a small, high growth company. They are going to have negative earnings for a while. It does look like they are in a trend to go positive though. Having negative earnings for a small, high growth company, you got to remember, is a feature, not a bug. There is going to be a little bit of dilution happening. As you can see, year over year, there's been an increase in outstanding shares. But if you would have asked me maybe in the middle of last year, they were posting a lot of negative cash flow. So I wouldn't have been too happy of this stock last year, but huge improvement in a year. Their latest reported negative 247 is a huge improvement, a 90% improvement compared to the quarter last year. Anyways, keep an eye on this stock, guys. I might be a little biased, but I do use the app, I do use this service, and they are a really good company. They might be a little overvalued right now because they are still getting some negative earnings, but I feel like they have a lot of growth opportunities ahead. I think after this year, after they improve some things into next year, it does look like they will. It does look like they are on a path to positive earnings per share and positive cash flows. So definitely keep an eye on this stock, guys. Let me know what you think. I do think it's a good entry at this price. You're pretty much buying it the same as the insiders are buying it. So all right, we'll keep an eye on this stock, and we'll do a little update on this video and see if there's any improvements on the quarterly data. All right, thanks for watching, guys.